Hello everyone, this is the pre-market report video for today 27th August 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, a quick recap about what happened yesterday in the Indian market. In the last pre-market video, we discussed how Fed chairman openly acknowledged the fact that he was ready to perform the rate cut. So it's obvious it was very positive for IT stocks. So IT increased above 1% since their most of the revenue comes from US. Then the other two sectors that outperformed the IT was one metal and another one realty. Here regarding metal, yesterday China made an announcement that they halted the approval of new steel making capacity. And also according to Bloomberg, the Chinese iron ore stockpiles fell to the lowest level in the last 4 weeks. So this supply restriction and the rate cut based demand increase hope together increased all the base metal price between 1 to 7%. In addition, already some of the Indian steel company also increased their price offering. So because of all those reasons which did made most of the metal stocks positive, and as a whole sector it too increased above 2%. Then in case of realty, real estate consultant Anna Rock released the report that residential prices in India's top 7 cities have increased 45% because of large new project offering in the high demand area, which is straightforward positive for realty sector. On the other hand, only media sector closed negative, whereas the other 12 out of 13 major sectors closed positive. About Nifty, it opened positive of around 90 points and in the next 1.5 hours it added another 100 points. After that, it just maintained there throughout the day. Altogether, Nifty increased 180 points, and if you see the contribution, it was evenly distributed among the stocks. 33 were positive and 17 number were negative. But none of the 50 stocks was influenced heavily on either positive or negative side. Hence, the Nifty increase was due to the index derivative market volume or open interest increase. However, please ignore the future market. I checked the open interest, it was barely changed. So it's clear the driver was option market. Generally, if more number of volume or open interest increase means, then the bid-ask spread or the price will drop. That with the time decay reduction will reduce the India VIX. But yesterday, despite the reduction in time decay, despite the put option open interest was increased by 19% and despite the call option open interest increased by 10%, actually India VIX increased, which means more number of option buyers is in the market than the option sellers, which according to me kind of indicating part of yesterday's increase was due to short covering. But the increase of open interest in both call and put side might pave the way for more short covering if the breakout happens means, which we'll discuss a little bit more in detail in the technical section. About institution, as per NSE data, FII was net buyer for the third consecutive day. Yesterday, the net bought for 483 crore rupees, whereas based on NSDL data, FII net bought the shares for 3880 crore rupees. Then for DAI, I know only the NSE data, the net bought for 1870 crore rupees. Hence, it looks like both the institution added the money into the Indian market. So, those were the quick takeaway from Indian market. Coming to US market, this coming Wednesday, Nvidia is going to release their second quarter business update. As a result, last night, all the AI related stock had the profit booking. Tesla case, Canada imposed the 100% tariff on Tesla as well as on all the Chinese EV import, which crashed the Tesla stock by over 3%. So, S&P 500 was down 0.32%, Nasdaq decreased by 0.83%, whereas Dow Jones still managed to close positive 0.16%. In case of VIX, since it tracks S&P 500, so increased near 2% and moved above 16. In line with that, GIFT Nifty also reduced. Early morning today, it closed at 25,036, equating it with the spot market. For now, it's indicating the flat to gap down opening of around 50 points. Then regarding Indian ADR, as it is all close to positive. However, if you calculate the arbitrage, Wipro indicating flat to negative, whereas Infosys indicating the flat to positive. Hence, overall for the IT sector, it's more flat note indication. However, in the banking case, it was clearly mixed. ICICI Bank indicating the negative arbitrage of 1%, whereas HDFC Bank indicating the positive of 0.5%. Then about oil, Libyan government made an announcement that they were reducing the oil production, which in turn increased the oil price by over 3%. At the time of this video, WTI crude trading at 77 US dollars per barrel, whereas Brent crude closed around 80 US dollars per barrel. So those were the things happened in the global market. Now let's move towards the new India related info. Yesterday, after the market hours, one of the reputed foreign investment firm Jefferies released a lot of reports like they prefer two-wheeler and tractors over other auto stocks. Then in IT space, they prefer Infosys and TCS over other mid-cap IT stocks kind. So all those stocks will be on focus. Here please note, as per Economic Times, TCS North America chairman resigned last night, so potentially that can also influence the stock price. Second, most of us know this coming Friday, Indian government is going to release the first quarter GDP data. So Rogers.com predicted 6.9% increase and SBI economist predicted 7% increase. Both of them were lower compared to the previous estimation. They said the lower number is because of the election, since Indian government didn't spend enough on the capital expenditure. As a summary, US market closed mixed and Indian ADR also closed mixed. So GIFT Nifty for now is indicating the flat to 50 points gap down opening. In addition, option volume analysis also not favoring the positive run. Here please note, as I said earlier, coming Wednesday night, Nvidia is going to release the business update, which in turn determines and influence all AI and IT stocks heavily on Thursday. And because our coming Thursday is monthly expiry, most traders don't be willing to hold the position open on Wednesday night. Hence, most probably either today or tomorrow, we can expect those positions to close as well. Then regarding the things to look out, early morning before our market opening, Chinese industrial profit data is due. Then at 11:30, Germany's GDP growth rate is scheduled to release. Finally, in the night for US, Conference Board Consumer Index, US housing inflation and 2-year note auction are some of the items we need to keep an eye out today. Coming to technical, as I said, Nifty opened 90 points gap up and increased above the psychological 25,000 mark as the day progressed and closed at above 25,000. Thus on the daily chart, Nifty formed a green candle after 2 consecutive negligible red candles, which in turn indicating the sentiment is improving. Finally, Nifty successfully closed the bearish gap that it formed on August 2nd and August 5th, and as usual, it continued a higher high, higher low formation with positive bias in RSI and MACD momentum indicators. However, as I said, after the initial 2 hours, we can see for throughout the day, Nifty struggled to claim above 25,080. So in order to continue the positive rally, a decisive move above 25,100 is needed, so it can potentially increase towards 25,300. On the other hand, failure to move above 25,000 might trigger selling in the market. Potentially that might bring the Nifty back towards 24,800. In case of Bank Nifty, it opened 200 points gap up and finally closed above 51,100 for the first time since August 2nd. Thus on the daily chart, Bank Nifty formed a small bullish candlestick pattern with a long upper shadow. Here, this upper shadow is an indication of selling pressure at higher level. However, it was above all key moving averages. So in Bank Nifty case, a close above the downward sloping resistance trend line is expected to start the next leg of the upward move. Regarding the monthly options data, the maximum call option open interest was at 26,000 strike, followed by 25,500 and 25,000, with maximum new call option writing at 26,100 strike, followed by 25,500 and 26,000. On the put side, the maximum open interest was at 24,000 strike, followed by 25,000 and 24,500, with maximum new put option writing at 25,000 strike, followed by 24,900 and 24,800. Thus, from options data, 25,000 is likely to be a crucial level for further direction. 25,500 is the resistance to watch, while 24,900 to 24,800 is likely to be the immediate support range. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I am doing this for me and viewers' educational purpose only. Thanks for watching.